Hey everyone, welcome back to Corporate Decoder, the place where we translate corporate jargon into something you can actually understand. Today we are diving into IQVIA's latest proxy statement. Buckle up because it's a long one and we're going to decode it. We will look into everything from how they pay their CEO to a possible change to the company charter. IQVIA is a huge company that provides services and data to the healthcare industry. Think clinical research, data analysis, and helping drug companies sell their products. 2024 was tricky for them, but they still managed to make money, so let's take a look. Revenue or total sales hit $15.4 billion. That's a 5.5% jump, which is pretty good, but remember that excludes some COVID-related income from both 2023 and 2024. They use something called adjusted EBITDA to measure profit. Don't worry about the exact definition, just know it's a way to see how well the core business is doing by stripping out some unusual costs and gains. Their adjusted EBITDA was almost $3.7 billion. That's up, but not by a huge amount, about 3.2%. Earnings per share EPS is the profit divided by the number of shares and is what investors watch closely. IQVIA's adjusted diluted EPS was $11.13, a 9.1% increase. They had very strong cash flow for the year too, increasing by over 40%. IQVIA also achieved a record backlog in their research and development business, meaning more future projects and therefore future earnings. They've been growing their real-world data analysis, which is super important for understanding how treatments actually work outside of controlled clinical trials. They also published a lot of papers, including some on the safe use of AI. Like everyone else, IQVIA is investing heavily in AI. They launched some new AI-powered applications. This includes tools to help design clinical trials and analyze data more quickly. The company got awards for its employee training programs. They try to get existing workers trained to fill in for the roles required inside IQVIA and reduce attrition. They are tracking their efforts to reduce their impact on the planet by achieving a 27% reduction in emissions for categories 1 and 2. Category 1 are emissions they directly control, and 2 are those which stem from purchase power like electricity. IQVIA was named the most admired company in their category by Fortune magazine. They got good marks for innovation, global competitiveness, how they manage their people, and how they use their assets. Looking ahead, IQVIA expects to grow their business 6% to 9% per year. They think their customers will spend more on research and development, and also that the company can continue to win a larger share of the business. They were able to assist in a quick response to the outbreak of the Marburg virus in Africa. They achieved this because of previous work to set up infrastructure and build connections in the region. IQVIA has been making efforts to improve their corporate governance, meaning how the company is run and managed. They have declassified their board of directors to make it possible for everyone to be elected every year. What this means is that all of IQVIA's board is elected every year. This helps ensure that each director stays in line with what the company stockholders want. They also publish information on their limited political spending. These were done to make company practices more transparent. They also have clawback policies in place. A clawback policy is what it sounds like if the company needs to restate their finances, or if someone in the company does something bad, they can take back some of the compensation paid to the executives. The proxy statement contains all of the information regarding the members of the board. They are up for election and will serve a term of 1 year. The board determines how non-employee directors get paid. The compensation program included cash retainers and stock, and they will get reimbursed for reasonable expenses and costs. A director, employee, or officer cannot engage in transactions that hedge or offset any decrease in the value of the company's securities without exception. IQVIA's board also has a strong system in place to manage risks. The Enterprise Risk Council is made up of people across different functional areas and business units in IQVIA and is responsible for identifying and managing key risks. The company has specific goals to reduce greenhouse gas emissions, and these goals have been confirmed and verified by the Science Based Targets initiative. Stockholders are able to call a special meeting if they represent a notable portion of the company MIDAS. This is limited to those with 25% or more of the common stock. The Audit Committee ensures that IQVIA's financial statements are accurate. In this filing, they stated that PricewaterhouseCoopers was selected as their independent registered public accounting firm and were responsible for a 2024 audit of financial statements. The company can get insurance to protect its directors, officers, employees, and other people representing IQVIA. This covers them against certain liabilities. There is also a shareholder proposal to improve shareholder ability to call for a special shareholder meeting. The proposal is asking for the threshold to be dropped to 10%, but the board recommends voting against it, stating the 25% threshold strikes an appropriate balance. The board also believes the one-year holding period to be appropriate to limit the special meeting right to only long-term stockholders with interests in the company. Finally, the report contains information about the ratio of CEO compensation to the median employee. The company estimates it to be 343 to 1, meaning that the CEO makes 343 times more money than their typical employee. This changes when the calculation only uses the US population, with the CEO at 230 times more than the median US employee. So what does all of this mean? IQVIA is a huge, complex business. They're facing some challenges in the current market, but are generally performing well and taking active steps to grow their business and control costs. A few things stand out to me. Their continued investment in AI seems smart, as does their focus on managing employee engagement. However, they are facing strong headwinds from factors such as client discretionary spending reduction, persistent high inflation, and global geopolitical unrest. From a valuation perspective, the stock trades at around 20 times forward earnings, which is not particularly cheap. This earnings multiple indicates some growth is expected, but given the macro situation, it may be hard to achieve. Their debt load isn't extreme, but it's something to keep an eye on. Overall, I'm leaning towards a neutral stance on IQVIA. They're well positioned in a growing industry, but there are definite risks. A reasonable price range would be between 190 and 210, and will depend on how well those risks and opportunities are handled. Thanks for watching, and if you found this helpful, please like, subscribe, and share.